Hammer. Now, I know many of you would have seen a hammer, and if you look at this candlestick, it simply looks the same as a hammer. A hammer consists of a black or a white candle. Now by black I mean red, and by white I mean green candle. Now why I have written black or white? Because some software shows it as black or white and you can change it to green or red. It consists of a small body near or at the high with no upper shadow or a small upper shadow with a long lower tail. It is considered to be a bullish pattern during a downtrend. So if it happens on the low, on a fall, then it is bullish because everyone was selling and someone bought it so much that the huge low represents that the price went up. It represents that the supply was all absorbed and the demand was so huge that the price rose up just to cover the demand. Now let's look at hammer on charts, on real charts. Hammer. Now a hammer on the fall is considered to be extremely bullish, and even if a hammer comes on a slight fall, then even remember it is a bullish sign. Now what do I mean by that? Just look at it on this this candlestick. Let me zoom in for you. If you look at it, it's what 97 is open and 97.54 is close. Now always remember, if it is red, that is it is minus from open, or if it is green, that is it is plus from open. It doesn't matter in a hammer. Both are the same. What matters is this shadow. The shadow should be huge. It should be extremely huge, and the upper shadow should not be that great. And once you see this candle, you will automatically know this is a hammer. Why? Because the shadow is extremely huge. And if it happens on the downfall, example here, it moved up after that. It happened on the downfall right here. Its open is 106.54 and the next close is 106.26. A small body, but the low 104.63. That's extremely lower. And it did rise up. See? It rose max up. So always remember this. Extreme low, and a small body, but the body could be green or red. So it doesn't matter if it is green or it is red. If it is in a down run, downward trend, it's considered bullish. Now let me show you one more. Saw somewhere. Example this one. It's 93.79 and the close is 94.09. But the low it's 92.39. So that's an extreme low with a small upper wick. That's considered to be bullish sign. And if you look at it, it did rose extremely highs. But these are patterns. So if a pattern fails somehow, then you need to be vigilant, because a pattern usually should not fail. It should be rising pattern, not a falling pattern. So whatever the pattern you are following, just be vigilant, because if you are wrong, then you should have a stop loss to get out. Thank you.